I was having this kind of moment where I felt like I'd like to get grounded by somebody who has a wide background, a strong background in a lot of different areas. And the name that came to mind was Jeff Lutz. And so, Jeff, glad to have you on this morning to ground
Great to
me.
be with you.
We'll see if you can bring me down to ground. Actually, it's not so much bringing down to ground. It's like sometimes you can get ivory towerized and start to believe your own stuff.
Yeah. Yeah, no, it's good to hear different viewpoints, and let's see where it goes.
Okay. All right. So you know what to do out there to if you like having Jeff on, because that tells me to bring him back and bring him back and bring him back. So, Jeff, where I want to start this morning is going to be with kind of the thing that's been driving the markets. It's had a big impact on Tesla. It will probably continue to have an impact on Tesla, at least for a while. We talk about it all the time in so many different ways, and that's the whole inflation issue. If my audience is believing me, I think inflation could potentially go to negative, or actually to deflation, maybe as early as the end of the year, and certainly possibly by the first quarter. But if it doesn't get to deflation, it might be at 0, 1, 1%, whatever. What's your take? What do you think is going to happen over these next few months into the first quarter in terms of the overall inflation picture?
Yeah, I mean, just numerically, June and July of 2022, a year ago, where a lot of the comps occur, those are 9 and I think 7% inflation. So the comps last year were really bad for June and July, and that helped really strengthen the June. Besides, the rate of price increases actually coming down in June and July, the comps were pretty bad to last year, and they get a little bit better. Again, it's all relative for the August reading and the September reading coming up. So it's going to mathematically be a little bit more difficult than the prior few months. But, things like housing, which are kind of latent in terms of their impact on inflation, that's going to really start showing, I believe, here pretty soon. And again, the measurement they use is something called owner's equivalent rent. They don't look at how many houses are bought and sold. They look at, if you were to rent your house, like what would that cost to rent out your home? It's a very strange metric given its weighting in the index, but that's what they measure. Energy and food are probably creeping up a bit just tactically over the last 4 to 6 weeks. So the headline number may teeter a bit or may stall out here for a bit, but the core number, which is what the Fed, I think, looks at, will actually, I think, continue to go lower. And yes. and then the other thing is what's going on in China, Germany. I mean, they're in full on, deflation mode, disinflation, deflation mode, actually, in China. They have negative PPIs. So we import a bit of, a fair bit of their PPI. So if their PPI is negative, we're gonna be seeing that as well.
Yeah. So if I don't know if you pay attention to Trueflation.
Yes.
The thing I love about Trueflation is they break it down by all these different categories, and then I also try to get my own reading from any place that I can find it. Trueflation is showing that even though it's slightly up the last few days, the only thing that's really up is gasoline. And yes, the flow through from gasoline. So the food and beverages is kind of flat a little bit right now to maybe slightly up. Things that are affected by gasoline, which food and beverages definitely are. It's a huge percentage of the cost of food. So if now we're seeing $6 down on oil in a week. I mean, it was at 84. Now it's 70, just under 78 this morning. I didn't look before you and I got on, but it was under 78 this morning and probably headed lower. I reported this morning that the United States is increasing, Canada's increasing their oil output. The 5 countries that really need the money outside of OPEC, Libya and Iraq, Iran, Venezuela, Syria, they're increasing. And we're going into the off season. So if oil comes down, gasoline comes down, that's like the last piece of the puzzle. We could be going into again, deflation potentially later this year.
Yeah, I think let's see what this trend looks like. Let's see if this oil production is sustainable. I just think this next tactical reading is going to be you asked like what's going to happen the next couple of months. I think this next tactical reading may be flat to a little slightly up on the headline, but down in core. That's what the Fed is concerned about. But I do think I don't anticipate. You have to go look at the causes of inflation, and I don't anticipate like this huge snapback, like to your point, and I could see it going much lower to your point as well, because the original causes of this were much of it was supply driven, and then we changed the way people behaved and where they could work, and kind of locked people up at home and brought forward a bunch of different purchases. So a lot of things were brought on by the pandemic that that just need to be rapidly unwound. And really, you're just looking at the causes of it. Like, eggs went up because there was a supply issue with various farms and infections. We have to go into these individual causes. And I wish there was a little bit more effort versus just like, not talking you and I, but just like, our government, just instead of just like looking at the numbers, oh yeah, that's nice, they went down or up, but more of like, okay, we're gonna have these teams focused on pricing. Like we're gonna go figure out these supply chains and what's happening in these critical commodities. Now the commodities have rolled over on their own.
Yes.
For many reasons, China recovery being slower than planned, but that could all accelerate. And I honestly think we need, again, instead of maybe more IRS agents, but actually more people that are, if you were to trade those bodies, like if you run a business, you had to make decisions, where can I put people? I would put people on, are there ways to actually reduce pricing for people so it makes it easier? Because if you're a consumer in this world today, or in the US, everything you buy today is about 20% or more expensive than it was 2 years ago.
Right. Yeah. And then one of the other elements that I talk a lot about on my channel, and I'd love to, again, get you to ground me here, is that while inflation is an extremely complex thing, has a lot to do with money supply, has a lot to do with the speed that money moves through the system. But one of the big ones that almost nobody talks about is productivity. And productivity, the more productive a company is, or the more productive a society is, the more wealth is gained. In other words, the more output per person you get across an entire culture or across a company, that increases the profitability of a company, or the wealth of the nation, or the wealth of the world. So if you have more wealth, then you have the opportunity for people to be able to buy things less expensively, because their output, they're putting more stuff out per person. More stuff means lower prices. So productivity in the second quarter leapt. I mean, it was negative for, I think, 7 quarters in a row. And then in the second quarter, it leapt. And to me, it made total sense, because how productive can you be when what's on your mind is, how can I find 15 more employees out of I normally have 100, I'm down to 85. I need 15 more, and I might even need more than that. And I'm looking everywhere to try to find out, how can I get a container out of LA Harbor into the get it to dock? And I'm looking at how can I buy more stuff when there's no stuff and all the factories are shut down. My mind is, and my emphasis is 100% on staying alive and finding product and finding new orders. I have no time to work on productivity issues. And then all of a sudden, everything's kind of normalized. Now I can, not only do I become more productive just by the normalization, but now I can go back to looking for ways to become more productive. Thoughts?
Right. Yeah, no, I productivity is a huge thing, and there just aren't great measures, and there aren't great actions in non-private industry. In private industry, if you're running a factory, you're measuring productivity, you're measuring units per person per hour. If you're building widgets, right, you're measuring these things. you're measuring your output per square meter of a factory. If you set up a factory, you want to improve your output per square meter, or organically, these are the things you measure. I just don't think those measures translate when you look at it non-private, you just look at our spend and you look at our deficit, look where that's going. It's ballooning. So the productivity piece is big. There's a lot of discussion about just the implications of AI and what's that going to do. I think we're in the very, very early innings. I think they were trying to call that game, thinking this is it. This is the solution. And I just think we're both in the early innings of what it will impact and how it will impact it. I think there was in the beginning this overemphasis of like all these jobs are going to go away. And I think what it will do and how it will do it, I think will actually surprise us. And there's now there are people being hired that actually work on the prompts that go into AI. There's people that are, so it's strange, but I do think productivity as a whole is going to go up as those tools actually mature and accelerate. Right now, they're the responses from them and the accuracy rate don't lend them to like necessarily to pin your business or you'll pin your business on it yet, but they'll get there. They'll get there pretty rapidly. So yeah, I totally agree with you. Productivity. I just think it's right now, unfortunately, it's more of a private industry thing and not as for public and government as it probably should be.
But part of my bringing it up is that I think it is combined with oil right now. I think it is the 1-2 punch that where I have my narrative about going to zero or maybe even to deflation. It's not a bad thing. It's not based on the fact that the Chinese or even the Japanese 20 years ago. It's not a problem of not having enough people. It's not a product of the economy going in the toilet. It's a product of productivity and an international pricing on oil, which if it stays good or even goes down, those two things will be, I think, the two huge movers of the inflation issue.
Yeah, I just think the productivity is going to take a little bit more time to play out, but I do agree on its impact.
All right, and so then when we get the inflation down, pretty much automatically you get a drop in interest rates, and so the bond has been the big deal. The 10-year bond has been a very big deal over the last, I don't know how many months it's been the headline, and it's actually starting to go down this morning, and so the 10-year bond kind of is what makes mortgage rates. If you want to see what your mortgage rates are going to be next month, we'll take a look at where the bonds are. As the bonds go, so goes the mortgage rates. And the 2-year and the 2-month have a lot to do with your personal credit cards and things like that, and your auto loans, the shorter term. So if the bonds come down, that is another actually deflationary issue. People don't think about it, but interest rate being higher means, inflation goes up. You are spending more for the goods that you're getting. So we have right now the highest real cost of interest that we've had for decades. And the real cost of interest is what we're paying in interest above what the inflation rate is. And that's typically about 1.5. And right now it's much higher than 1.5. And again, it's at record highs. So once again, this looks like another element that maybe is extremely positive right now in terms of the direction.
Yeah, and that just happened. I think the 10-year's been spiking over the last several. I think it's a double top. I think it spiked in February, kind of relaxed. Well, first off, it spiked last year, right? We had, I think in October, we were up at 4.2, maybe 4.25. Then we had that spike again with the banking crisis in I think February, March, and now we reaccelerated. It's almost like there's a double top this year. Hopefully that means if it's a double top, that was a peak and it's coming down. So this morning I think it's down 2 or 3%, which is it's a big move for a morning. And I think that yield is reacting to the manufacturing PMI data being weak this morning. I think it was expected to be stronger, and it came in weak.
I did not
so I
see
think,
that. So
I think, so that data weak, yields come, lower, and, the equity markets are reacting to that. So yeah, that inflation plus that real 10-year rate, that's a real issue. And I think mortgage rates now are at 7.5%. They may before they go lower, they may try to hit 8. But hopefully, if this 10-year comes down, those rates will come back down with it. And of course, the Fed has to cut.
Right. And that is the other, the final part is how the Fed is going to react. So we've got the PCE next week, which is the Fed's favorite index of inflation. That is on Thursday. If we get the PCE with a better read, now I think last month there was 3% on the headline and 4.5, 4.6 on the.
I don't have the PCE numbers in front of me, but it sounds right.
I think that's about what it was on the base. I'm thinking that based on Truflation, and Truflation tends to run about a little over a month ahead of the PCE. Based on Truflation, I think we could be looking at core PCE next week at under 4%, which I think the market would just go nuts.
Yeah, you're right. That is the indicator the Fed uses, and hopefully we'll see some momentum with that from the prior month. I know there's a meeting there. All the Fed governors meet in Wyoming, and that I think Powell gives a speech. I think it's Friday. Yeah, and then last year was that famous 8-minute speech that really sent the markets lower. He's given like 30 minutes or so to speak, and he spoke for 8 minutes, and he was very, very hawkish. So, he's got a much, much different, set of data now in front of him than he did a year before. Inflation is definitely on the downside, and he's got some pretty weak. There's some strong data in pockets, but there's also some weak data that says, you better be careful here of just not misunderstanding the lagging effects of really the fastest rate hikes in multiple decades.
Yeah. So, given all of that, let's turn our attention to Tesla. Quite a lot of negative headlines over the last 3 or 4 days, just a whole bunch of negative headlines. And that those negative headlines had kind of gone away, and now they're back. I don't know whether that's just, happenstance or whether there's some mysterious force behind it. Mm-hmm. But one of the ones that attracted my attention actually more than the others was the whole idea that Berlin may be not finding enough employees and/or might be slow walking on purpose because there's not enough demand. Then that made me think about Austin. We haven't really heard much about Austin ramp. We haven't had any, group photos and talking about hitting new numbers. With Tom running this thing, I would have thought maybe we'd be having a lot of information about big numbers out of both Berlin and Austin in terms of the ramp. I said months ago that probably if I was in Elon's shoes, I might slow walk without telling anybody if I thought there was a demand issue. What do you think? What do you think is going on?
Well, I mean, in the earnings call, I think one of the things that was managed really well was kind of ripping the Band-Aid on Q3 and saying, hey, look, we're going to have to upgrade our factories for a number of different reasons. But production will be slightly lower than Q2. They did not say deliveries would be lower than Q2. And I think people need to take note on that, because it would have been very easy for them to rip the Band-Aid and say, look, since we're taking production down, deliveries will be down. They didn't say that. So my take is they actually said this. They said production will be lower, and they said they're going to be taking factories down. So they didn't give us a schedule, then nor are they going to give us a schedule of saying this is when Berlin's going to go down, this is when Austin's going to go down. So we don't know. We'll hear rumors from employees. We'll hear bits and pieces from here or there, but we actually don't know what's happening. But we should take them at their word that they're taking their factories down to upgrade, especially with Highland coming. And really, when anybody who builds a factory and capitalizes a factory, and like you don't set your production calendar for 52 weeks of production in the year. You set your utilization rate based off of a denominator somewhere, probably depending on 46 to 49 weeks, depending on holidays. You've got downtime for maintenance, you've got downtime for upgrades. So it's normal. I saw somebody, and may have been Gordon, publishing utilization rates of factories, and just, as long as the utilization rate, if you can get it above 70 or 80%, you've got you're in a good area from a cost perspective. When you're running north of 90, closer to 100, you could be really cruising for, some downtime, some breakage, an issue. You've done something, you haven't capacitized your factory probably in the right way, and you're could be moments away from failure. So it's hard to say exactly what's happening. The inventory feeds out there are unreliable, and the reason I would say that they're unreliable is being inside of a factory, there are many reasons to build inventory. There are many reasons of why an inventory is at a certain level in the beginning of a month or beginning of a quarter versus the end of a quarter. Mm-hmm. You usually start shipping your furthest distance node, regions early. So you're building up inventory early, and it may stay in your inventory numbers until it reaches that destination. And I can also see Tesla building up some inventory for these shutdowns. So I think there's a number of things that are kind of at play. It's really hard to say one thing or another, but with prices haven't increased, EV adoption is increasing. So I always go back to EV adoption. I just view that as the magnet, and I don't view that there's any other competitors that are actually shipping meaningfully higher volume than they have prior.
In the United States, but in China, of course,
yes,
these guys are picking up. So the China, right. But my feeling about China with regard to selling everything that they can make, first of all, there's been no evidence at all so far that there's been any slowdown in China. So maybe it's going to happen in September. If it's going to happen, maybe it won't even happen until October. We don't really know when the Highland is going to actually come out. But in China, since you're not expecting really significantly more production than they had third and fourth quarter of last year, they don't have to sell more vehicles than they sold last year to stay 100%. And they've opened up new markets. They've opened up Malaysia and Turkey and
Thailand,
India. And so there's all kinds of new markets that they're shipping to, as well as markets like Australia that were getting nothing, and now finally Australia, the demand is huge. So I don't really see any risk of not selling every car they can make out of Shanghai. The risk in Europe might be a little different. I'm not sure, but they can ship those. They got export markets for those as well. And then in the United States, I think they're going to sell everything they can make here. I don't know. So I'm a little surprised, because part of the statement in the second quarter was we're pedal to the metal. We're going to make all we can. If we have to cut prices, we have to cut prices. And yet, and of course, they did say it could be a little less than the second quarter. But it just I don't know. I have this sense. I don't know. It's a gut feel that maybe there's a little slow walking going on. You don't think that? You think it's just preparing for the fourth quarter? They're just going to knock it out of the park in the fourth quarter?
I think the fourth quarter in Q1, I think they're going to knock it out. And one of the big reasons is the IRA moving to a point of sale credit. So the consumers in the United States that qualify literally drive off the lot with that $7,500 taken out of their purchase price of their vehicle. And then, of course, you'll have Cybertrucks, you'll have the new Model 3 out there. There's a lot of catalysts for Q4 and Q1, but it's going to be messy. Product transitions are messy when you're ramping a new product line. It's messy. Both the 3 and the new 3 and the Cybertruck, those things are messy. And I think one of the things that's different with Tesla is just the news cycle. It's not 24/7. It's actually like every minute. So. Whereas in normal companies, I remember just reading about the Ultium factory for GM, their only battery factory in Ohio, being down on June 28th. And they come on the earnings call 3-4 weeks later in July and say, yeah, the factory's still down. We have a supplier, degassing issue. We have like 3 or 4 weeks went by. If that were Tesla, that would have been headline news every day, all over X, all over CNBC. And some of it's frustration, but some of it is actually trying to explain, like, it's almost like we may be overanalyzing in some respects. And like, again, they may have to take inventory up for the shutdowns. They may have known these shutdowns are coming, so the inventory is could be a little bit higher, but then they're going to start blowing through it while the factories are on pause doing their upgrades. And then if you do that, then in Q4 you got to replenish it because your rate of sales are continuing to increase. You're not a stagnant. They always try to compare Tesla to legacy auto, and they're a very stagnant, steady business. GM does 600,000 cars in North America. They're not going to do 800,000, this quarter. They're not. Therefore, you don't see these big movements in one way or another in inventories like you would with Tesla, which should be steadily increasing because their rate of production is increasing. Their rate of to your point about the new customers coming online. If you're selling cars in Turkey, you have an inventory node somewhere in Eastern Europe where you've got to get cars in and get them distributed into Turkey. So anytime you add customers, you're adding nodes of inventory. That's just how it works, and you're trying to turn all those as quickly as possible. And again, Tesla tries to do direct to consumer as much as possible, but those are just the realities.
So you may be most famous in the YouTube world and in the Twitter world because you are the guy who's saying margins are going to be amazing in the third. Well, I don't know if you said it exactly that way, so I'm putting words in your mouth, but that the margins should be improving. As you point out, we haven't had price cuts. We haven't had price increases either, but we haven't had price cuts of any significance. And the commodity prices, the battery prices, et cetera, on the cost of goods side, and the costs related to the factory ramps should all be going down. More Model Ys being sold compared to the other lines, so those should be more margins than, say, Model 3s. More cars in Europe and more cars in the United States being sold compared to China as a percentage basis, which should be higher margin. Where do you feel? How are you feeling right now about third quarter margins?
Yeah, so I think it's going to be a little bit of a mixed bag because back to the inventory conversation, if we are going to start, getting rid of some of that 90 to 100,000 cars that were left over from Q2 going into Q3, those cars were built, at the older COGS from the prior quarter. So there, I would just say, let's make a list of what are the puts and what are the, the takes, or what are the favorable things and unfavorable things. So that's an unfavorable thing if you're shipping inventory from the prior quarter from a gross margin perspective, unless you're experiencing price increases, which they're not doing. So that's one unfavorable thing. The Model 3 and Cybertruck transitions, be it low volume, that will be another unfavorable thing. The lines will be running at lower utilization. The labor rate efficiency will be less. Those 2 quarters will be the highest cost quarters for those products, in their history. And it's just math, but again, it's on a smaller number. I would say that's another negative thing. And then if these Austin and Berlin rumors are true, like I think Troy's seeing some gaps in the VIN data out of Austin, and if that data is true, well then Austin and Berlin are not going to be making progress on their their factory transformation costs, or their the cost to actually do general assembly and build the car. So those could be some of the weights on margins. But what are the things that are going for Tesla is that PPI deflationary thing that we're seeing out of China right now. That's a big one. And we're seeing obviously we're seeing a reduction, a reduction in inflation, I guess, in the US. But yeah, input prices, commodity prices are meaningfully lower. Tesla, does something called event-driven cost reductions, from their engineering teams, from their supply chain teams, and from their Tom Zoo factory teams. They'll go in and say, all right, that part, we won't need that part, or we're going to combine these two parts, or we're going to take that process and cut the cycle time in half. They do that every quarter. They do it, famously probably better than most. And they have they have an ability to rapidly and frequently introduce these things into the line and not be overly disruptive. Where at other companies, they try to group these things together and do them in one big manner, and they usually move a little bit slower. So the event-driven reduction side, the commodity side coming down, those are big improvements that Tesla will see. So from Q1 to Q2, I was looking at the 3 and the Y COGS, and it looks like they came down 3.2%, just looking at 3 and Y, which is about 92 to 95% of what Tesla builds.
Right.
So those came down 3.2%. And if you look at the MSRP changes are on 4 to 6% of global volume. If you take those two China models, it's about somewhere between 4 and 6% of what Tesla ships globally. You do the math on it, and it's $120, round up, say it's $200 per car. If Tesla is taking out 3.2% in COGS, 3.2% in COGS, if you pin the 3 and the Y somewhere in the 35 to 37K range, you're talking about $1,200. So you're talking about $100 or $200 reductions in MSRP, and you're talking about $1,200. If they just do as well as they did Q1 to Q2, right, I think they're going to do better. I think that PPI deflation, I think Tesla's cost reductions are going to do slightly better than that reduction.
So in other words, you're looking for a pretty significant beat in third quarter earnings call or earnings reporting.
Well, like I said, it's going to be messy. You have the puts and you have the takes.
Well, you have the 100,000 cars that will obviously have been sold during that quarter that were from the previous quarter. But that's 100,000 out of, let's call it 500,000. So overall, though, looking for a beat.
I am. I mean, it's all going to. Let's see how the guidance comes in. Maybe the guidance is going to take all this into. It's going to take it all in.
Better than that.
Yeah. Well, I just, what I'm seeing though in the street is I just don't see a very good ability or very solid ability to model COGS. They're really good at taking the MSRP reduction, putting it in a spreadsheet and saying, well, this is what happens to EPS. But on the COGS side, there's just not, you just have to do critical thinking, I think. $100 in MSRP, if you do that, the third grade math versus, and again, if the electronics industry, the auto industry is usually about 1.5% per quarter deflation on COGS. This is what kind of the floor is for them. If you do better than that, you should be doing better than that. If you do less than that, something's going on. But we're in a deflationary environment, so you'd have to think that that's going to lean more to the right of 1.5% than to the left. Right. And the $100, $200 MSRP reductions is literally 0.3% of COGS. Yeah. So you'd have to have a real blowout in cost. You'd have to take all of those things where the wind's at your back on commodity deflation, on what Tesla's doing with their cost reductions in product, and you'd have to have a real blowout to miss, I think.
So do you think that the analysts who work in the automotive world are, as to your point earlier, they're not used to this kind of price reduction taking place, that these big automakers, it's the same car, it's been the same car for years. They don't need to go that deep in order to kind of estimate what's going to happen on a quarter by quarter basis. And now they've got this entire...
I think there's COGS modeling that's happening, but there's so many pieces in legacy auto between producing a car and then getting it sold to the consumer, because they don't have a direct to consumer model. Yeah. So there's more transparency. I go back to the news cycle with Tesla, like every minute, every hour, as soon as that configurator changes, we're seeing it all on Twitter. Everybody knows. But in the legacy auto world, it's a lot more or less transparent. I would say it's far less transparency with with pricing changes there. You'll see it eventually when they calculate average transaction price, but that's when the quarter's over. It's really difficult for them. I mean, they do channel checks and they do see things, but you don't know if that's on the dealer side. You don't know if that's on, if that's coming straight from the manufacturer. So it's a little bit more obfuscated, I think.
So we've got the Model 3 Highland refresh, which may or may not be out before the Cybertruck. But the Cybertruck, we've got, 1.9 million orders. I mean, they're just going to ship them as fast as they can make them. And obviously they're going to sell the highest dollar or the highest profit unit that they can sell for the first year or whatever. I'm not terribly worried about that entire picture other than how fast they actually can ramp it. That'll be extremely interesting. But on the Highland, it was, I think it was Brian White who kind of brought it to everybody's attention that sedans are still a pretty significant part of the automotive business. Everybody's thinking, oh, no, they're not. Well, in the United States, still pretty significant in the $25,000 range, but worldwide, a sedan is still a big deal. So what happens if the rumors that we're hearing right now are right? And it's really a $27,000 car in China. It's a $32,000 car, $33,000 car, base price in the United States, and it looks good. Is there a potential for a real shock in terms of units?
Yeah. And no one's really putting that on this launch. They're kind of looking at, okay, they're refreshing, 6 years, the product's been in production for 6 years, time for a refresh. Automakers do that all the time, but I don't think they're going to be able to comprehend the level of COGS reductions that they're able to, go from 70, 80 mechanical components in the body to two castings, for example. I don't know if they're going to do a very good job of modeling that and modeling the implications of that. And then, Tesla lowers the MSRP. The first thing that they'll jump to is like, well, then they're digging in the margins again versus understanding like how this thing is actually constructed. And I hope Tesla goes into that if they have a launch event for this and they go into like, this is a much simpler car to build and here's why. So yeah, I think there's an opportunity for, I've always said I believe the Model 3 refresh is going to be meaningfully cheaper to build. If they figure out how to get kind of more of a sportier or even more attractive body style, which I think the current Model 3, is still a great looking car. But I think if they were to match those two together with lowering the price and making it more sporty looking, I think it's going to do very well.
So my question was with Brian White, and he had his theory. I'll ask you your theory. So let's say it's really a blowout. Obviously, they'll raise the price again or whatever. But I mean, where do they go to increase production?
What's nice is a lot of the long lead time items to make a Model 3, I'm guessing, are going to be the same. I don't think they're switching to a 48-volt architecture. I think they would want to sync up the 3 and the Y, given the reuse between them, and do them both together. Again, I could be wrong on this. So if you're going to increase supply, you want to get your long lead time components, locked away and understood. And the fact that they trade a lot of those between the 3 and the Y, I think it helps. Let's see what the car looks like. Maybe there'll be some more divergence, obviously. But yeah, I think then they'll be able to increase capacity organically in their factories. They do a tremendous amount of vertical integration. So if you get the long lead time stuff, shared with the Y, if they needed to pull some, I'm sure they could, especially if it's a newer product will get more, may get some more initial demand on it. They could probably, steal some of that from the Y for the long lead supply and maybe just change. They can just maybe increase the configurator length on the Y for a little bit and fulfill these needs on the 3, and then figure out what the real run rate of the 3 is and update their suppliers.
So what about if it's bigger than that? What if the blowout is bigger than that? In other words, again, Brian took me through some numbers that in terms of sedans, you get down to that $27,000 price point in China, you could be looking at real big numbers. Do they have I mean, Brian says, okay, they'll be able to increase the number of threes they make in Shanghai because of the new layout. So maybe that's a 10 or a 15 or 20% increase. But what if this is a big deal? Do you think originally I remember, not many other people remember, and maybe I remember incorrectly, that Berlin was originally going to make Model 3s. Do you think there's any chance that Berlin gets into the Model 3 business?
I don't know. I do know that body style is popular in Europe.
Yeah.
But as long as distribution costs are as low as they are right now, I'm thinking the manufacturing costs out of Shanghai will always make that a winner. If you could source from both factories, and you had a choice, the fact that we don't have these $10,000-$20,000 container charges for distribution, my gut is they would try to consolidate that in Shanghai. That could change if it's a big, huge success, and that could change. But I think they would just expand in Shanghai, to be honest, and of course the U.S. Fremont.
Okay, all right. So you've alluded a couple of times, and I have already made myself well known on this. I think that because they only make 466,000 cars in the third quarter doesn't mean they're going to sell 466,000. My number is 500,000. What do you think is going to? I think they're going to pull 35,000 from inventory because it'll just happen that way. It's just there. If there's not enough cars, then inventory goes down. So that's my number. Do you have a number?
I am north of 470 now. I'll pin it on an exact number, but right now I'm north of 470. I'm not saying 500. I'm saying it's possible for sure. But I'm somewhere probably in the 470 to 485 range. Okay. But call it just over north of 470 right now.
So if
I go back to I think, Randy, they had the opportunity on the earnings call to just guide lower because they already ripped the Band-Aid for production, but they didn't. So they know their orders. Yeah. When they were in that call, they had all the August orders.
Yeah. So going forward, okay, I'm just about to actually start looking at 2027. I have not done my spreadsheet for 2027 yet. I look at 2026 as like the year of Tesla. It's the year that everything should be done. FSD, robotaxi, Optimus, Cybertruck. Semi-truck, model.
Gen 3.
Gen 3. That's what I call it. I try to remember Gen 3 because I think that's the best way to describe it. So everything will be done in 2026. So they should do, I don't know, $1 trillion or $7 trillion. I'm not sure which. But but right now, let's just look at fourth quarter and first quarter, because I think that fourth quarter and first quarter are going to be game changing in terms of the way that the investing public looks at Tesla. Whether it's the Cybertruck rollout, I just did a thing, the 10 ways that the investment community is going to be shocked with the Cybertruck in terms of visibility, in terms of reviews, et cetera. But I think all the things you just mentioned, the lower costs, the Model 3, the Cybertruck, the changeover at the factory, production starting to just ramp up big time into the first quarter, that it's going to completely change the narrative.
I'm with you. And in fact, if there's any noise in Q3, right, with the factory downtime, with production being lower, with maybe deliveries, not, let's say deliveries are flat to whatever. If there's any noise in Q3, I'm hoping that they say, look, we're gearing up for literally the biggest quarter, we've ever had, and by a meaningful margin. I know they don't guide with anything specific beyond their annual guidance, but if they'll reaffirm the 1.8, I guess you do the math, you'd have to have a pretty big Q4. So yeah, and again, I think if I'm Tesla, I'm looking at this IRA and I'm looking at the impact of it. I see the state incentives, I see the federal incentives. There's all this talk of like, well, it may not be that way going into the following year. I don't know why that would change. I could see there being risk post a year or two, maybe post the election, if there's any meaningful change in one of the laws. But I'd have to think Tesla's looking at this IRA going to point of sale and saying, look, I got to replenish. Number one, I got to replenish my inventory from Q3 because I burned through it with my factory downtime. So I can't just be sitting here with a couple of days of inventory. I got to get that back up to that, 80, 100K, maybe even higher range. So I think production in Q4 could be really just off the charts. Now, that's going to depend if, how Model 3 goes. Because remember, Model 3 is still probably 1 out of every 4 cars they build, I think, is probably a Model 3, maybe even higher. So that ramp has to go really well. But if that ramp goes really well, I see Model Y continuing to scale. And I think they got to build a lot of production in Q4 to get ready, at least in the US, for the IRA. And then hopefully globally, an economy that's looking forward to rate cuts and some stabilization. That's the other thing via the macro. What will macro tell us?
Yeah. And then we get into Q1 of next year when we'll be ramping Cybertruck. Do you have any takeaway from the fact that they're spitting out somewhere around 7 to 10 Cybertrucks a day right now? Does that give you even the slightest amount of thought about whether it's been easy or hard so far? I realize that when you get to 100 a day, it might be a whole different kettle of fish, but any thoughts with regard to the current level of production?
Yeah, putting my critical hat on for a second. First off, I am encouraged, but as you know, and I know, when you're running a line, we don't know if any of those trucks are good.
Right.
We don't know if they're production, they meet all the production specs. We know that they're built and they're put together. We don't know if they're meeting all the specifications. If Tesla, somehow indicates they're going from release candidate builds to production builds, I think that's a very big sign, because that means what's going down the line is passing tests, and they do believe that they're shippable vehicles. So we don't know if these vehicles are just for testing purposes, which is what I believe. I think you've got engineering teams and reliability teams that have been starved of units because this thing's been under development for a while, and there's been battery shortages. So I think you've got engineering and reliability teams that have done a lot of great work, through simulation and through very low volume prototypes, that now we need some vehicles to do our validation testing. We need to do this off-road testing in Arizona. We need to do this water testing at this facility we built in Texas. We need to do boom. There's all these different test cases these things have to go through. So I think that's what these vehicles are for. So yeah, I'm encouraged that we're seeing new ones every day. I'm encouraged by the frequency. I just love to know that are these things good, or are they actually meeting all the specifications? That's, to me, is the key thing. And then the other key thing is, what was the run rate of the line building these things? Are they trying to get the factory line up to their peak velocity, or if it's running at super low velocities, when you crank the knob over to the right, you'll start seeing new issues. So that's part of ramp.
Yeah, of course, absolutely. And again, my ramps were a lot easier because I'm talking about a bicycle water bottle, as opposed to now injection molding. Sometimes those ramps are a little more.
Yeah, that tool runs at a certain rate, right? It's got a certain click rate on that tool for that bottle. Yeah. And in the beginning what you'd have to get it to in terms of time to get good product out, get all the flashing, get everything on, and then once you can get that cycle time to where you want it to be, you get your cost in line, and you be getting better product out the other side. So, it's just that process of getting up that curve.
Yep. Well, okay. So, this is not a question that is necessarily specifically in your bailiwick, but I've been asking everybody this question. I'm thinking that the wrap on the Cybertruck is adds, and I'm a marketing guy, right? I feel like it's adding an entire another dimension to the product, and that it will be that the percentage of Cybertrucks that get wrapped will be very, very high. I don't know what the number will be. It'll almost be competitive out there in terms of who has the coolest wrap. And what do you think?
Well, actually, if I could equate it quickly to the smartphone world, for years it was you can get, black and white or black and gray. And then eventually you started seeing smartphone manufacturers make an assortment of colors. I actually worked on a product line where we changed the whole design of the product. So we made an endoskeleton, basically an engine that could ship and be inventoried in factories. And we moved all the color decisions to this very late stage process, lower cost, late stage process. So we ended up shipping a product with 3,000 different color combinations that you could order one day and get it 2 or 3 days later. And so I kind of like, to me, that's a little bit synonymous like with the endless opportunities you can get with wrapping a vehicle. And you'll get big uptake on that, because if they can get the process down, or third parties can get the process down, people are willing to pay to personalize their product, because everybody doesn't want to have a product that looks just like everyone else. Now, at the beginning, there'll be so few Cybertrucks, you may be fooled by the uptake on wraps. But I still think it'll be strong in the beginning. But I think it'll get stronger once Cybertruck's in full production. I think you'll get a very big attach rate. The other thing too is stainless steel. If anybody has a real stainless steel refrigerator or some sort of appliance, it's difficult to keep clean, to keep the fingerprints off. It's also, I would say, difficult for, Tesla maybe looking at this as an opportunity too. If they've got, I don't know what the cosmetic defect rate of this. Everybody's all like super happy about the fact that we don't need a paint shop, which I am too. That's a big cost reduction. But when you're bending the stainless steel and you just have the raw material coming in, it's got to be really good, really, really pure. And there's a high propensity to scratch stainless steel through the manufacturing process. So I could see Tesla looking at this, in a different way. It's a high margin opportunity. It could also potentially hide, when you have a full Cybertruck built up, the last thing you want to do is have to tear it down because you've got a scratch on one area. So if they can't figure out a way to effectively post-process those out, then who knows? I'm not saying they're going to put the wrap process in the factory,
right? But
it's just an interesting thing to think about.
It really is, and part of my thinking about it is that everybody who initially thought the truck was ugly, or people who still think the truck is ugly, I think it just looks better with the wrap on it. For some people, the really out there look, the futuristic look, the all stainless look, might look really, really cool. But I think there's a big piece of the population that think it was like, a little too stark for me. But man, you throw some of these wraps on there, and it's just a lot of fun. And like the one everybody wants to buy. Everybody wants to buy my wrapped toy here. Until I tell them that there's nothing. It's an image, but anyway. But
it looks real.
If I had made one of those and started selling it, I could have sold lots.
Yeah, I think so. In the Tesla community for sure, especially if it's a remote control car, that would be fun.
That's right. Yeah. So anyway, I see that as being like a kind of a whole other dimension to the Cybertruck story, but also one that will make even more rubbernecking take place as the thing is released, just increasing the PR that much more, which overall, as many people are pointing out, it's just going to, Gary Black probably most famously talking about how much it's going to impact the world's view of Tesla as the innovator, as the tech company, as a truck company now. And then, of course, the last question will be for the Cybertruck is somebody trustworthy saying, yeah, it's a great work truck.
Yeah. I think it's going to change the land. It's going to change how the roads look. And I think it's going to change how people think about it. Yeah. And as soon as you get some influencers that are like, yeah, this is not only better than any other truck EV, but it's actually better than any other gas powered truck in specs and performance. I think that's going to be very exciting. Some people won't be able to get over the look. That's why I thought the Ford F-150 wrap was very comical. But yeah, the ability to personalize it, I think businesses are going to want to do that. I think government agencies are going to want to do that. So I think there's a big business, a high margin business out there, and I'm pretty bullish on the product. You know, Elon has said that this is going to be the best product they've ever made. He's going to know what specs the thing's performing to and what it's capable of more than anyone. So I'm most interested in that launch event and what specs and what pricing they reveal for those specs.
Aren't we all? So all-time high in January?
Hard to say. It depends on supply and their ability to produce this thing. So it's hard to say. You've got the macro component and you've got their ability to supply it, but the ingredients are certainly there for the stock to take another leg up. Again, not investment advice, but you just look at what's happening in front of us with the Model Y being the number one volume vehicle. That means when Tesla goes into any supplier, they have the number one. They're fighting to get Tesla business, right? Because if you get a part award with Tesla, you're going to get the most volume for your CapEx and your labor investment by getting an award from them versus getting an award from a GM or someone that's got 100 different models.
Absolutely. I've been on the other side most of my life, on the sales side. And, we obviously 25 years ago, we wanted to sell Kmart, Walmart, Target. And the buyers, if you didn't have the right sales rep, you weren't going to get an appointment. Even if you had the right sales rep. One time with Kmart, we had a top sales rep that they did business with all the time, but we were new to them. The appointment that we could get, the one that they would give us, was 7 a.m. That's because we had to come in and be the newbie on the block. So yeah, you're always going for that top guy. And so yeah, Tesla, obviously they've got everybody wants that business. There's no doubt about that. Jeff, it's been delightful as always having you on. I think we covered a whole bunch of stuff, which is exactly what I wanted to do today. And we'll have you back soon.
Great to be with you, Randy. Thank you.
Okay, so for all of you out there, hit like right now. If you didn't already hit like, now's the time. It says, bring Jeff back. Hit subscribe, hit notify. Lots of good stuff coming up. And then follow Jeff Lutz I forgot. The Jeff Lutz.
Yeah. The Jeff Lutz. Yep.
You're the Jeff Lutz. By the way, I didn't realize it until like this week that you'll never, ever be able to get your personal brand high up on the Google search, because there's another Jeff Lutz that seems to dominate the entire first page. He's also in the auto game, sadly.
That's okay. I'm fine with that.
You're okay with it? Okay. All right, Jeff. All right. And for all of you out there, it has been great talking to you.
Click the link below to get your paperback, Kindle, or audiobook now.